This conference will now be recorded.
Okay, if I can get a mover and a seconder so we can open the meeting, please. Grego and Belinda. Moved by Drago Stefanik, second by Belinda Kistemaker. Be it resolved that we do call this special meeting of council to order on Monday, July 19th, 2021 at 6 p.m. Those in favor? And that is carried, none opposed. And our next item of business is the approval of the agenda. If I can get a mover and a seconder, please. Peter and John. Moved by Peter Kistemaker, second by John Parrott. Be it resolved that council does hereby approve the agenda as presented. Those in favor? And that is carried, none opposed. Item number 4 is disclosure of pecuniary interest and general nature thereof, declaration of conflict of interest. Council, you can do that now or at any time when such a situation may arise. And we're starting off tonight with a presentation why we had called this special meeting. So I want to welcome Ben Cohen to our meeting. Thank you, Ben, for being here and for presenting to council. And I'm just going to let you take it away, Ben. And if I think everyone has met you before on council. And the floor is yours.
Thank you so much, Mayor Cheryl. And it's a smoky day in Winnipeg, and so we're hoping to see the blue sky here, but we've had a ton of smoke blow in from BC. I would say I really enjoyed the trip out to Hornepayne last week. Had the opportunity to meet with folks up there and provide an update to the Studio 6 extended stay suites that we're looking to build in Hornepayne. And I know you're supposed to save the best for last, but sometimes, you know, there are those of us who like to eat the ice cream first. So the ice cream is had an opportunity to meet with our banker, with Eric Picard at the Case Alliance in Hearst, and got a very favorable final review to the project. So we'd met with him. We gave him give him the appraisal and various documents. I'm going to walk you through the presentation, but the ice cream is we had a very favorable last meeting at the bank. So that worked out really well. But I'm going to walk you through the various steps, the history, where it's at and where it's going. I gave you a little preview, a sneak preview to the conclusion, but I'll walk you through. Hold on a second. I'm just going to move this around on my screen. So the key milestones to the development of the hotel, and I had originally met Cheryl on the phone in the summer of 2019, and in the first bit we had talked about perhaps doing something, redeveloping the hotel portion of the Hallmark Center, but as it turned out, it was a engineering difficulty. We'd met in the fall of that year with some engineers from Sudbury, and it was a difficult process. So we began discussions with the town. Those discussions you would have come across your desks, and basically secure the site for the Three Bears site that allowed the town to retain the statue. And then in the end, with the help of the engineers, the surveyors who came in, we carved out about an 1.5 acre piece, a 200 by 300 foot site, which not only allowed the town to retain the statue, but as we drove by on Thursday afternoon, a very busy playground, kiddies playground, tennis court, and some ball fields. So wonderful green space around the site at the very, very heart of the community. So what we think is a wonderful site for the town and a great site for the guests and just a real win all the way around. We're never sure about, securing the franchise for, in a smaller community, but we got approved the extended stay suites franchise for Hornepayne, and it's I think a wonderful concept. It's stay for a night, stay for a week, stay for a month, stay for longer. Each suite is 50% larger than a hotel room. They're 312 square feet, full size fridge, cooktop, stovetop, microwave, all cookery and crockery, even a table and chair, kitchen table and chairs, everything all in. And so great for the guests, amenable for people coming back and forth, and amenable for people who have an extended stay suite. Then we had a feasibility study, which was completed the 1st of March, which gave a very strong thumbs up. We had Rich Eichler from Calgary, who's a longtime consultant in what they call the upper economy side of the business, completed the feasibility study. It came out very strong. And then we got, in the middle of COVID, Mayor Cheryl says it was a bit of a miracle, but we got a hotel mortgage in the middle of a stay-at-home order. When many hotels were shut, we'd received a commitment for a mortgage, the final submission July of 2021 to go forward with the project. Then, of course, we needed a clean phase 1 environmental that came back very, very nicely. And about 10 days ago, we received the appraisal done by Boreal Appraisals in Calgary. Sorry, forgive me, out of Sudbury, who had a look at it. And so this was our third independent consultant who reviewed the project. Each of them didn't know each other. Each of them was arm's length, and lots of independent due diligence to come up with these reports. And so we had a successful appraisal completed, and now we've established a closing date for the transaction and construction process to launch August 31st, 2021. So a bit of history right from the beginning, all the various steps that we went through, all the key milestones, and takes us to where we are today. And going to go to the next slide. Sorry, I just have to move this over. Sorry. Okay. So, what was our starting point for this? Our starting point was that we had very strong historical evidence for a hotel, which was borne out by the Hallmark Center. So, if the previous hotel was in the community, wasn't doing great, well, why would we want to build a hotel there? Or that wasn't the case. The historical evidence was very, very strong. Next, there was anecdotal evidence of people that we speak to. The feeling in the community was very strong for a hotel. And then early on, I solicited letters of support from public, private organizations, everything from the churches, the hospitals, all the way up to CN. Received very strong letters of support, and people wrote in independently. I think we have about a dozen of these, and very strong letters of support for the business case for a hotel in Hornepayne. With those letters all went to the feasibility consultant. He spoke to about 25 different individuals and economic stakeholders, and reviewed those materials, reviewed those letters, spoke to those people directly, and upon those conclusions and interviews, came up with his feasibility report. The appraisal came in even about $500,000 higher than our initial construction estimates, and so again, arm's length independent review of the process came in with a very positive report. Finally, again, anecdotally, the forward outlook for local travel is super, super strong. Our partner owns the hotel at Marriott in Thunder Bay, and they would have had a really fantastic weekend. Very, very strong occupancies right across the board. Our franchisor owns the 2 Days Inns in Thunder Bay, also very, very strong. But the whole local travel outlook now post-pandemic is very good. And I would tell you that hotel bookings in the fall are very, very strong. So a bit of a rough patch in the hotel business, but coming back very, 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 very solid. And so we believe the hotel is it's a very strong, profitable opportunity and a very good economic driver for the town of Hornepayne. And just go to the next slide. And so big questions, and these were questions that we reviewed with the Municipal Service Corporation last Monday, which took us to the presentation today. But basically, looked at all the big questions. The big questions are: what does it cost to build? How long does it take? What are the revenues and profits that it generates? What's the investment that's required? What's the return on investment? And what are the risks and opportunities? And so, sort of again, a 360 view of the hotel, all the big questions that you'd ask, and I'll walk you through you'll come away with a good sense and feel for it. So here we go. I'm just going to move that over. Sorry, my screen was not cooperating there. Okay, so how much does it cost to build? And of course, it's been a moving target. Probably lumber prices, as the people at Hornepayne Lumber happily know, it's been a very blessed year for the lumber business. Great for the town of Hornepayne, great for our partners in the lumber business. But of course, everything costs a bit more to build. So our construction estimates were done the first week of March, probably at the height of lumber pricing, when lumber was around $2,000 per 100 board feet. And now it's probably fallen to about 600, or maybe it's going to land around 1,000 in the fall. But those are forwards. Nobody exactly has a crystal ball. But our construction budget per the appraisal, all in $6.77 million. So the construction appraisal, so what is the completed building worth? About $6.77 million. So we have some room in case there's a 6 or 7% extra wiggly room in case commodity prices have another volatile turn. I should point out these are the turnkey budgets, including all the soft costs, opening all the way down to software, sign on the highway, all of those things. So this is the turnkey budget, and so things are starting to settle down in the construction costs, and our mortgage lender, the case, has taken that into account and is going to provide mortgage lending support at the higher level. So if it takes the $6.77 million to complete the project, which is what the appraisal is at, we have the bank mortgage support to do that. You'll see we've got we sent along a Dropbox which we created, and I think that Mayor Cheryl has forwarded that along. And in the Dropbox, you'll have everything. You'll have everything from the site plan to the appraisal. You don't have to read all 97 pages. You can look at the 3-page summary at the beginning. You can read all 97 pages if you like, but there's lots of supporting materials. There's also the feasibility study, construction estimates, revenue, and even detailed line by line pro forma that's included there. What does it look like? I think that some of you have, maybe all of you have seen this before, but this is the site plan, and so you'll see this is Front Street down here, entrance and exit access over here. It's 57 feet wide. It's 132 feet deep, which is plenty of room on a 200 by 300 square foot site. And we have nice appropriate setbacks, nice setbacks to the park and tennis court area, setback to the building, to the apartments behind. good parking. Everything works on this site. Trash access, 360-degree fire, setbacks to the street. It's designed with compliance in mind. The only little stretch that we're going to ask you for an extra access here. This is, I guess, an official road along this side here. It would be nice to have this extra little exit, maybe a bit convenient for some of the guests, but not necessary, not essential. It's just it would be nice type of thing to have that one extra little access point. But everything works in terms of access, egress, setback from the road, etc. And you'll note that the entrance to the hotel matches up with the trailhead of the snowmobile route. So we think that there's going to be a tremendous business with the snowmobilers, great enhancement for the community, for the town of Hornepayne, and quite frankly, a good economic driver once things open up and our American cousins start coming back again. So that's what it looks like. In reality, it's a little bit different. The site that we have from the town includes an extra little triangle here down at the bottom right-hand corner. It's not really usable land, just be a little bit of green space. So when we lay out the actual drawings, we don't use the extra little triangle down here. Nice size rectangle. It's about a 1.5 acre site. So good access all the way around the building. Parking works. You'll notice that we've penciled in a restaurant as we move forward with the hotel and it gets complete. You know, we have that moving. We'd like to have a restaurant here. We don't want to be in the restaurant business. Our hotel partnership doesn't propose to be in the restaurant business, but we'd like to lease it out to a qualified operator. We've had some discussions with a person who would be well qualified to run the restaurant, but we would just want to be the landlord for the building. So we can do a design build. We want to be the landlord. We don't want to be in the restaurant business. And in our projections, we didn't account for any revenue coming from the rent of the building. If we get it completed, wonderful. If it doesn't, then it's not in the pro forma. But had good discussions with the case and maybe some good opportunities at FedNor to assist the operator to get what would be very competitive financing to allow that person to get into the restaurant. And had some discussions with Mayor Cheryl and your team, with Stacy, about the opportunities in the restaurant. And we think it would be a very viable business. Of course, our priority was to get the hotel up. But once that's done, we'd like to complete the site by having the restaurant here. Parking, access, egress, fire all still work with the restaurant on the site. And there's a bit of flexibility to the actual dimensions here, but that's what we think would be an ideal, probably about a 50-seat restaurant, which would be, I think, a nice gathering place and an amenity really for the town. And a couple more slides. So what are the revenues for the hotel? What does it generate? So we tested this 3 different ways. In December of last year, we hired a hotel consultant, former senior manager with RealStar, with the franchisor. He's out of Southern Ontario, and he did what we call a line-by-line budget down to the shampoo bottle. So how many face cloths do you need? How many shampoo bottles? What's the occupancy? What is the credit card charge you? So like 3 pages of very detailed financials, and those financials are included in your Dropbox link. So you have that study. And so then, of course, that was tested against the feasibility study and the appraisal. So 3 different independent parties looked at what would be the revenues for this property. And it was almost uncanny. The independent study done by fellow Byron Martin almost matched the feasibility study done by Rich Eichler. So those are about $572,000, and there's a very strong economic return on the project. So it's not cash on cash, it's paying down the mortgage, but on a 20-year mortgage, the economic return on investment is about 20%. Of course, so you're paying down a mortgage, there's mortgage interest. So what's the cash on cash? And the cash on cash is projected at 11%, with a holdback reserve that would be built up. 3% of that would be as a reserve, and we project an 8% annual distribution on the share investment. The hotel's, the hotel is a straightforward business to run. We don't put bars in these hotels, so there are no bar fights. We don't put restaurants in the hotels, so there are no cold eggs or overcooked fries. We have the operating and business model as straightforward and simple as it can be. In fact, we don't put a swimming pool in. Lots of cost, lots of moving parts, difficult to manage. So we have a very straightforward business plan with the hotel. It's in the rooms business, and we believe that in Hornepayne there's significant some pricing power, and we think that there's some really good opportunities for long-term stays. So you can see that those detailed appraisal reports, the line-by-line pro forma, are all in the Dropbox. But overall, because the business plan is very simple and straightforward, there are less moving parts than there are, say, in a full-service hotel. A lot less crazy stuff that can go on. It's basically renting rooms to people who are renting rooms to travelers. Often they'll cook for themselves, so they can make their breakfast for themselves. If the restaurant is open, it's great. If the restaurant's not open, that's great too. They have the opportunity to it's an amenable place to stay longer because you can make your own meals if you need to, and it's a snowy night, or you don't want to eat the restaurant food anymore. We do find that a lot of people will check into an extended stay suites hotel, then often still go out for a burger and a beer, as I call it. But at the end of the day, they have that choice, and the extra elbow room in the suite makes it a comfortable place to stay. So, what is the investment that's required? So we structured the partnership as with $150,000 equity shares. So we have an exemption from the Ontario Securities Commission. We would just file a exemption letter once it's completed. So we'd like to have, we've raised $1.35 million from independent shareholders, including ourselves. And so we've come in for 2 shares because we think that the hotel in Hornepayne is going to be a great investment. We were looking really for 3 additional shares, one from the Municipal Service Corp, and I understand that they've approached you to participate in the funding of that, but I presented to them last Monday night. And we have 2 investors from Hearst. We have Hornepayne Lumber through Mr. Dettori coming in for 3 shares, a couple of other independents. And so we really have a wonderful collaboration between industry, ourselves, independents, local business. It really is a very good broad-based group. And we're ready to go. We have the mortgage commitment. We have a solid appraisal. We have, I think, a wonderful banker who spoke very highly of the opportunity in Hornepayne. And you have a credit union down the road who really believes in the community, and in the future, the community is prepared to make a sizable investment. I would, of course, assume that the case would have done additional extensive due diligence over and above the reports that we provided. They would have done their homework, and they've done their homework, and they've come back with a thumbs up. As a reciprocity, about half the building costs will be spent in Hearst because they have a great variety of trades, whether it's the plumbing, electrical, HVAC, different mechanical aspects, and so it's a great economic windfall to the entire region because the town of Hearst is making an investment in the community, and we're going to reciprocate by providing subcontracting work back to Hearst. So we've put in all the big rocks, the mortgage, the outside investors, and really it's gotten to the point where it's been greenlit by the key parties, and I think we had a favorable meeting with the MSC last week, and now we're down to the last details to get everything closed for the 31st. So return on investment. You can't distribute all your profits. Delayed gratification is a good thing. So we're going to project a 20-year pay down on the mortgage. We're going to have appropriate cash reserves over and above that. And so, yes, there's going to be good profits, but we need to retain some money for reserve, and we need to have and pay down the mortgage in a reasonable amount of time, a 20-year mortgage, not a 30 or 40-year mortgage. We think that there's a very good opportunity. There is an exit strategy to the project. We would be happy to own our piece of it for the long foreseeable future. But franchised hotels or franchised real estate with strong management are always marketable, but especially right now, the demand for real estate, if you've seen in your own community and throughout Ontario, demand for real estate is very high. Demand for well-managed branded real estate is perhaps even higher. So unlike, independent hotel, which wouldn't have the profile, wouldn't have the, the management processes, having both integrity in the numbers, all the data, all the revenues go straight through to the franchisor. So someone down the road wanting to buy this property knows exactly what it did for revenues and expenses from the day one, because it's all reported to the franchisor. So we think it's a good business for today. We're happy to be involved for today. And tomorrow, at some point, whenever that tomorrow is, if the shareholders as a group are in agreement, then there's also a way for it to be sold to another party down the road, given the strong franchise. I'll just give you a little overview to some of the numbers and how it works, and you have very detailed numbers in your drop boxes. We're going to build 44 rooms. We project an average daily rate of $135. And I can tell you, I almost always pay more than that for much smaller, much older, much draftier, much noisier rooms in the adjoining communities, whether that's in White River or Hearst. It's no insult to the people who run those hotels. It's older product. They're not as well insulated. They're not as quiet, and they're not as spacious. So I pay more than that in Hearst for less. We project a 70% occupancy, and that's been borne out by the feasibility study. So this comes out to the estimated total revenue, $1.5 million and change. And the estimated expenses are at 62%. Gives us that middle line profit. On the cost, 8.5% return on the cost, but of course there's leverage, and the leverage at 75%, is a mortgage of about $5 million and change. We think we can get that interest rate down maybe another quarter point or so, maybe a little bit more. $228,000 of interest, return on investment $344,000, about a 20% return. Of course, we know we have a 20-year amortization, which gives us the net cash on cash return, and that's where the reserve allowance and expected distribution come from. So that was just a quick highlight, but you have much more detailed information back in your Dropbox. And my last slide actually brought my partner Abe Enhang out to the site and to meet with the bank last week, and he was very, very suitably impressed. Abe has made very substantial investments in Northwestern Ontario, not least of which is Delta by Marriott in Thunder Bay, 100 condos on the water, the CN station in Thunder Bay, the Abitibi Price Mill site in Kenora. And he came away from Hornepayne feeling very comfortable, very positive. But I just walk you through a few of the what I see as the risks and rewards. So we see three possible risks. Hornepayne is a small community. It's possible that we're all wrong about the demand. It's possible. Construction could be delayed or could be over budget. Interest rates could rise. So those we see as the three possible risks. And we've had to make ourselves comfortable with these risks because we're a significant investor in the property ourselves. And so to give you just the short answer, an answer of something we've been working on for about a year, but at the end of the day, we feel that the three independent sources that have looked at the demand and have felt comfortable with that gives us a lot of comfort to proceed. And of course, as I referenced, the Case Populaire would have done their own due diligence, independent of whatever documents we gave them, and also felt comfortable with the demand. I will tell you, I met with Frank Dettori at his office in White River at White River Forest Products. Met with him last Wednesday, and originally he said to me, well, right off the bat, he said, well, I'll take 1,000 rooms. So 3 rooms a night for a year, 1,000 rooms. And then when I met with him on Wednesday, he said, I need 10 to 15 rooms. I'm like, well, Frank, you need to give me an order because I think that CN is going to come in for a nice chunk of rooms, and we'd be happy to accommodate you if you could. So wrote to him, and we're working on even a greater initial buy than 1,000 rooms. So we think that the demand is definitely out there. Second, we've tested with 2 different quotes the construction costs, and we think that while there's some volatility left in the lumber prices, we think that it's definitely gone the right way. That the crazy peak time, I know it's good for you guys in Hornepayne lumber, but the crazy peak time seems to be over. Peaked at $2,025. Frank said he's at about $600 right now, market price, and about $1,000 is what the forwards tell us. So it seems that the big volatility, maybe some volatility, but we have a fixed price contract with our general contractor, and that looks like it's under control. And with the mortgage, nobody has a crystal ball. We're going to look for we're going to conclude at least a 5-year term with the mortgage lender, and he seemed last Thursday amenable to that, to give us a wide enough window to get the hotel up, established, and going, cash flowing. We'd have 5 years of reserve built up, and so we think that is a manageable aspect. Lastly, I just conclude by saying that we really see a strength in the branded hospitality projects. We like the square peg in a square hole. The category of this hotel is upper economy, so it's not the bottom, but so you want to put the right type of hotel in the right community. So upper economy gives you a little bit of an edge, a little bit nicer than what they have maybe in Hearst, White River, and adjacent communities, but it's not a luxury Marriott. So we want to have something nice, nicer than the competitors a little bit, but not super luxe and not priced out of the market. So I think choosing the right franchise and choosing the right product is really key. And we're a big believer. We're the first development group to bring extended stay suites to the smaller communities in Northern Ontario. And all the research indicates that the concept will be very successful. So that's my high level overview, and happy to answer any questions.
Thank you so much, Ben. Thank you for that. And I'll open the floor immediately for council for questions. Just making sure we stay on time. We are a bit over, but I wanted to give you that time, Ben, so that the council was thoroughly, so that they got the whole presentation. So I open the floor to questions from council. Councillor Stefanik, go ahead.
Yeah, Dear Mayor, thank you, Ms. Cohen. Excellent presentation. I really enjoyed it. Gave me an overall impression and a feel for it. So in respect to rate of return for the investment, 150,000, you said 8%. Is that correct?
We projected 8% cash distribution and equity build up beyond. Yes.
Okay. And what is the term of the 8% into the future until we get their $150,000 share back, or that's where it ends, or does it continue?
It goes on. Hopefully, either the hotel is owned by the investment group, and for the long foreseeable future, or it's sold to an outside party. But of course, we're paying down the mortgage. You get the 8%, plus we're paying down the mortgage every year, about 5% a year. And should the ownership group decide in 3, 5, 7 years, whatever, that you can make a capital gain, well, it's a great thing. You can the ownership group would cash out, and the new owner would take over, but you have the return of capital back plus a profit.
Thank you very much. That's the big question. I thank you for answering.
Thank you.
Thank you, Councillor Stefanik. Thank you, Ben. Is there any other questions from council? Councillor Paroff, go ahead.
Yes, thank you. Through you, Mayor Sherrill-Ford. Ben, the 8%, the return on investment, sort of, is it in the form of a dividend, or does it come out as something else?
Well, that's a very good question. So generally, the way the documents are structured is that it's structured to defer the tax. So we do a return of capital first. So you get it's return of capital. So you'd have one share being a common share, which is the equity, and 150,000 preferred shares. So in order to defer the tax, it would be a non-taxable distribution. So you get those back until all the capital is back. And then after that, you push the tax liability forward.
Thank you.
Thank you, John. Do you have a follow-up question?
No, you answered that quite well. Thanks.
Okay, great. Any other further questions from council? Yeah, go ahead, John.
I'll have one more question if it's all right.
Yeah.
Through the discussion there, and you had multiple discussions with a lot of people about staying there. if in the future, is there room on that site to expand another couple of rooms?
Right. That is a good question. In fact, Mr. Dottori sort of even opened that up for us. So rooms are built in pods of 6. So two across and 3 high. And there is room on that site. It would eat up a bit of the parking, but it is perfectly it is possible to add additional. It is possible to add additional rooms should it be required. I think that the needs assessment, at least for the hopefully you have a great economic continued economic growth, but it should be able to, this size of hotel, notwithstanding Frank's comments, should be able to soak up the demand at least for the coming years. So we think that it's the right size of property. Initially, I'll tell you the very first discussions I had with Mayor Cheryl were around a 32 or 34 room hotel, back to sort of the size of the Hallmark Center, and it was after discussions with CN and Mr. Dottori that we went to 44 rooms. But to answer your question directly, yes, we can add. There is room on the side of the hotel, on the south side, to add additional pods should we need it. And additional rooms don't cost that much to build because you've already got your services in and your HVAC and so many other things. But yeah.
Thank you.
Thank you, John. Thank you, Ben. I have a follow-up question to that, Ben. So if there was extra rooms to be built, you would need to secure those ahead of the build, or could they be put on after the building's up and running?
Great question. The answer is yes to both. We are in some discussions with, if, for example, Frank Dottori came back with a really strong, he's taking 1,000 rooms off the bat. If he came back with a very significantly higher number, then we might go back. We might review it then. My gut instinct is to go with the plan as it is. It's been established. Unless there's like a real good long-term commitment, we project a 70% occupancy rate. And we can still accommodate lots of people by going to 80, 85, or high 80s and still run the hotel efficiently. You can't ever run it at 100%, but you can run it into the 80s. So there's room over and above that to soak up some additional demand over and above what we project.
Okay, thank you for that. Council, any other further questions for Ben on the presentation or any of the documents that you received in your package? No? Okay. Well, thank you, Ben, for coming tonight.
Thank you. A pleasure.
And our administration staff will be in touch with you, and we're going to carry on with discussion now with council, and we'll be in touch. Is there anything you'd like to say or close with?
Thank you so much. I've just really enjoyed. I've enjoyed working with the team. I've enjoyed meeting the folks in Hornepayne. It really feels it's been a really great partnership, and looking forward to getting our hard hats on and getting in the ground this fall.
Yes, thank you. I did the MSC as well, that the time went very fast. Like, it's now to come to this point, whereas at the beginning it was, like you said, just an idea and looking at the old mall, and now here there's an actual site plan and investors in, and yes, so
it's come a long way. So I appreciate all the efforts the team has made, and the support of the town has been wonderful.
Okay, great. Thank you so much.
Okay,
Ben.
all the best. Okay, bye now. Take care.
Bye.
Bye.
Okay, great. So I'll open up the floor for any further questions from council, and just for a general discussion. And we're going back to, I'm not sure if, Melissa, did you want to speak just a second. Council, is there any questions you want to initially say? And then I'll go to Melissa with her background study that she found her report. No? Okay, Melissa, would you like to speak to your report that you sent out today?
I don't really have anything further to add. I just, if anybody has questions, I'll take them.
Okay. Do we have any questions for our Treasurer Client Service Manager on the report? Go ahead, Councillor Stefanik, yes?
Yeah, through you. So the bonusing is not an issue according to your information and data. Is that really 100% clear then, Melissa? Thank you.
No, not exactly. Stephen Shoemaker said that he's going to prepare a draft memo to have for me for next Friday that will outline all of the specifics.
Okay, thank you.
Thank you, Councillor Stefanik. Councillor Paroff, go ahead.
So the way thank you for the way I read it is, if we go through with this, the books have to be done through the township. Or can you elaborate on that, please?
So they would, from what I understand, I had a telephone conversation with Nathan before he sent me the email. And from what I understood, that they would only have to be consolidated with the township should we provide them financial assistance. And then when I sent an email back to request clarification, I got the automatic notification that he was on vacation. So he'll be back in the office tomorrow, so he can answer my clarification question.
Does that answer your question, John?
Yes, it does. If it goes that way, though, is it a major issue or is it just a stumbling block?
Well, I don't know if the town has to oversee the financials or if they're standalone, because from what I understood, that it would be two separate entities from the township.
Yeah, my understanding of it was that it would be completely separate entities. We would run our own bookkeeping under, like, similar to the townships, so that they could be looked at together. But my understanding was always that our audited financial statements from the township would have to have the MSC there because it's our corporation. Like, it would have to be just like, even though we're arms like at the library, their books are audited. Are you seeing that, Melissa, as being the final outcome?
Yeah, I think so, but they've taken a different route with the library now. They used to be consolidated with our financials, and now they just take a quick look at it and say that they're unaudited financial and just one pager.
Okay. But this might be different then too, then even with the library, just because it is owned by us. It is our investment, basically, if you want to look at it that way.
Yeah.
Okay. So maybe this is actually good. We're getting good, solid clarity that we can move forward with.
Okay.
So,
I was under the impression that the books would be totally separate and the township wouldn't have anything to do with the books. But all right, thanks.
okay, thank you, Councillor Paroff. Any other questions or discussion at this point on this topic? So from your report, Melissa, if we were to, so we could give you guidance that if we're able to do the grant, that we could go forward with it once all of this information's come forward. Because we all know that all of us here at council don't want to do anything that's beyond our boundaries, what we're allowed. We definitely, I think we're all on the same page there. We say that time and time again. So, Councillor Stefanik, go ahead.
Yeah, just a comment. After reading all the background data that was given to me by Mr. Cohen and listening to an excellent presentation and asking the question, which was really bothering me. He answered it straightforward. I would have no challenge or difficulty at this time to recommend with the rest of the council to proceed with the share or 150,000, as long as it does not run into bonusing or challenges later on for administration team as well as municipal council. Thank you.
Right. And I'd like to follow that up too. Like in the final paperwork, when that's looked at, that the share is that's it for the investment, that there's not further investment. And making sure that there's, like, I'm sure there might be in the language that there might be a buffer, say 10% or 15%. That I'm okay with, but nothing beyond like another, double the price, that sort of thing, if it goes into overruns. I'm not sure if our other counselors may have more information on this, what I'm alluding to about cash overruns or anything like that in business investment. I see John and Peter shaking their heads, so that could be a possibility, is what I'm saying. Councillor Paroff, go ahead.
Yeah, no, I was just going to say I agree with you. That's a good point to think about.
Okay, just protect ourselves that way.
Yes.
Okay. Okay, so do we have a general consensus that if it's permissible, that we give direction to staff to proceed with the grant to the MSC so that they can proceed on their way to the investment?
Yes.
Councillor Paroff, were you agreeing?
Yes,
Yeah.
I agree with that.
Everyone's in agreement with that. Okay, that's great. So we've got that consensus. We will do a formal resolution. I'm just trying to walk us through the process here. Melissa, I see in the documents that you gave us, we want to do that transfer for the fitness and weight training reserve because that was pre-established. And then I see 3 different areas. Have you made any suggestions to where you think those should come out? I know you gave us the table and the reserve allowances.
So prior to the investing in the housing corporation, before that came out, I had suggested to Gail that it all go into the levy stabilization. But now that there's an opportunity to invest, perhaps you want to put it into the municipal service corporation and hold it there until it's decided if you can make the investment or not. And Gail had mentioned that maybe if the township was able to invest into the hotel investment, that maybe the township could do 75,000 and the MSC could do 75,000. So just putting that out there, something to discuss.
Okay, to split it. Okay. I think from our standpoint right now, just because of the timelines, I think it might be better just to go with the one, if that's permissible, because it's all municipal council in the end. But I do like the idea of the levy stabilization, because this is forward thinking into that fund. That's the way I look at it. So you're saying take the rest of the surplus, put it into the Municipal Service Corporation fund, and then where does the rest of the dollars come from? Levy? Transferring from the levy reserve?
Yeah, if that's council's direction, yes, that we can do that.
Okay, I'm sorry, I wasn't sure. Was that on the line of guidance that you were giving us just previous?
No, I was saying prior to the investment, I was saying that the levy stabilization would be the way to go. But now that the opportunity present to do the investment, then to put the surplus in the Municipal Service Corporation fund.
Okay, I see what you're saying. Okay, so we have a surplus. So with the 20,000 that were already allocated, and we just need a resolution for that. We did that in our budgeting process. How much is the amount that we'll put into the levies, or sorry, into the MSC fund? It's 80,000 something?
Yeah, it's 86. Just give me a second.
Yep. And just as Melissa's figuring that out, so the discussion is taking that surplus, putting it into the MSC fund, and then taking the additional dollars that we need to get to the 150 from the levy stabilization fund, that reserve, and transferring it over. Okay, I'm seeing consensus. That's good. Just we're going to need the full, we'll need the right numbers, correct, for this resolution? Okay. Well, Melissa's looking for the numbers. Do we want to discuss any further conditions that we want to apply to this arrangement? And before we go to that, John, I saw you had a question or a comment. Councillor
Yeah,
Powell?
no, I just want to clearly understand this. So the municipality is going to grant the 150,000 over to the MSC. In return, within about 2 years, about 18 months, the municipality would recoup their money just through property taxes. And the Hornepayne Housing Corp will have a stabilized fund income. Is that a way to look at it?
We can look at it that way. We haven't quite got to that full discussion. That was the conditions we want to put on it. So right now we're just granting to the MSC, but any conditions that we at council want to put on that, we can. Like one condition could be that in the event of the sale in the future, that the municipality gets back its initial grant portion of that 150. But even if they made more money than that, the MSC could keep that for its own purposes. We could put that condition in. And then the condition of that, the profits, any profits of that, that the MSC can use to further housing development in our community. Like we wouldn't be touching any of the profits or anything. It would be their grant completely, right? It would only be if it was in the event of a sale at the end. Does that sound, that's just one idea, John. That it could be something else. Council, you may have different things that you'd like to see.
So the amount's 86,742.
886,742, and the amount that would need to come out of levy after that, then that would be the surplus amount.
$63,258.
63,258. Okay. And that would be withdrawn from levy stabilization. Okay. So in front of you in your package, there is a resolution that staff was able to develop for us. So it reads, be it resolved that the council, the corporation, the township of Hornepayne does hereby authorize the client service manager treasurer to transfer the following from the 2020 budget. So that would be the 86,742. I would put that in there, Melissa, even though it's the surplus. Okay, so the 86,742 into the MSC corporate fund. Is that the title? Okay. And then 63,258 into the MSC corporate fund. Do I have to say from the levy stabilization in the resolution? Yeah, okay.
Yeah.
Okay.
Yeah.
And then the third line there that is there would just be blanked out. We don't need that line, correct? And then it would be resolved.
Yeah, just cross it out, an initial.
I'll cross it out in initial. Okay, I'm not filling out the good copy yet. Okay, and then the rest of it is another resolution. Yeah, okay, sorry. Is council good with those two numbers and the way I just read that so I can fill in the resolution, this first resolution? I'm getting consensus, okay. Oh, we might have to type this up, Melissa, because there's not enough space for it all. Can we do
Okay,
that?
that's fine.
Okay. Yeah, it's getting pretty crowded. 6-3. Okay, so I've got the bottom one crossed out. I have those two figures. The first one is a figure to the MSC Municipal Service Corporation Fund, and that figure is 86,742 into the Municipal Service Corporation Fund Reserve, and 63,258 from Levy Stabilization Reserve into the Municipal Service Corporation Fund Reserve. Okay? And if I can get a mover and a seconder for that, please. Peter and John. Okay, moved by Peter Kistemaker, second by John Paroff. Be it resolved that the Council of the Corporation of the Township of Hornepayne does hereby authorize the Client Service Manager, Treasurer, to transfer the following from the 2020 budget. $86,742 into the Municipal Service Corporation Fund, and I have in brackets MSCF Reserve. And also $63,258 from the Levy Stabilization Reserve into the Municipal Service Corporation Fund, MSCF Reserve. Any further comments on the motion? I put it to a vote. Those in favor? And that is carried, none opposed. Okay. And I skipped over, I should have done the one for the Fitness and Weight Training Reserve, if I can get a mover and a seconder for that. Drago and Peter. Moved by Drago Stefanik, second by Peter Kistemaker. Be it resolved that the Council of the Corporation of the Township of Hornepayne does hereby authorize the Client Service Manager Treasurer to transfer $20,000 into the Recreation Fitness Weight Training Reserve from the 2020 budget. Any further comments on the motion? I put it to a vote. Those in favor? And that is carried, none opposed. Okay, so now moving on to our other resolutions or motions that, so the following one is where we can talk about conditions in that. So it is, be it resolved that the Council of the Corporation of the Township of Hornepayne does hereby grant, I will place in $150,000 to the Hornepayne Housing Corporation for the purpose of purchasing a share in the hotel investment opportunity provided by Rideout Bay Developments Incorporated. Be it further resolved that Council does hereby authorize the Client Service Manager to transfer blank from the Municipal Service Corporation's Fund to the Hornepayne Housing Corporation for the purpose of participating in this opportunity. So that's the $150,000 again, correct, Melissa? And now these are the conditions that we can put on this arrangement. Council, any further conditions? Go ahead, Councillor Kistemaker. Belinda?
Somehow I would like to see that money be used to reinvest back into the Municipal Service Corp in order to go to another project that they may be able to work on. So it's being reinvested again and again type thing. That's what I would like to see.
Okay, are you talking about the initial 150,000 or the profits?
Both. somehow.
Okay. Councillor Paroff, go ahead.
I like the 8% going back into the housing corp, but I would suggest that the township, well, through the taxes, the township should be covered. Then everything else could go to the housing corporation. Like I don't want the township to be out 150 grand if they don't recoup it somehow. So
Okay.
through the first couple of years, we would recoup it through taxes anyways, right?
Yes, yes.
So that's what I'm trying to say.
Okay, okay. Do you want to put in a clause like that if in the future they sell their share, that the initial 150,000 comes back to the township?
No,
No? Okay.
no, sorry, no.
No? Okay. And Belinda, you're saying that you would like to see any profits that are garnered through this investment be reinvested into the housing corporation and into further development of their objectives?
I think further development, yes, for further development into something, whether it's start with the municipal service corp, but into something. So it should be always making money for something else.
Okay. Do we want to give them a broad mandate on that, like just by saying that into their objectives? Because we've already aligned those as a council of how they're going to roll out their role, or how they're going to dole out their role. Is that satisfactory, or I might not be following you, Belinda, so let's take the time.
Okay.
Yeah, that's okay. Like,
Somehow I just like to see the money that if any profits that are made are being used to maybe put into a reserve for something else, but we have to make sure we get the money back first. I agree with John on that. But anything after that, I think that any extras that we make is used to reinvest in something for the community. Investments or properties, whatever, something like that. So yes, in the municipal service corp. So the municipal service corp does survive in order to do something for the community. Am I still being pretty vague?
no, that's good. Well, we can't, really, it's a grant, so we can give them guidance on where we would like to see that go, right? So
Right.
no, I think, yeah, go ahead, Councillor Paroff.
But the mandate, basically the mandate for the Hornepayne Housing Corp is solely to do the very purpose of creating housing, right? So they can't really go outside of that anyways, without council's approval. So you're right on the money there, Belinda.
Okay, so be it further resolved that the following conditions will be applied to the arrangement. That profits from the share be further invested into the objectives of the housing corporation. And then that we've taken our hands right off of them now. It's their. Councillor Stefanik?
Yeah, I agree with what everyone is saying. I think the 8% that will come on $150,000 every year should go back to the corporation. No question, the profit. They could use it, may put up reserves or for project development that's be aligned to their strategic moves, not just to spend money. I have no problem. The only thing I'm looking at the long term. Would the municipality not want to have the $150,000 back in case the place facilities sold? Or do you want the money? I want to be really clear on this, what the council feels. Do you want the money to go back to the housing corporation, 150,000, maybe 5-6 years down the road? I think that has to be sort of decided now. Also, we know where we're going, Madam Mayor.
Yes,
Thank
I agree.
you.
I agree. We have to either decide that it's a complete grant and it always stays with the housing corporation, or does council want the initial 150,000 back if it's ever sold above that amount?
Yeah.
Go ahead, Councillor Paroff.
That's a good question. I personally would like to give it as a grant, but there might be some kind of legal thing surrounding that, maybe.
True, you're not giving a grant if you want it back, maybe.
Yeah.
Okay, that might be it. So I'll lend you the money till you make money on it.
Yeah.
Councillor Kistmaker Peter.
Yeah, I like the idea of just granting the money. Other than the 8% or whatever the return on it, that could be used, reinvested back within the housing corporation for further development. We are going to be making quite a bit of money off of taxes and water, which is going to be a much needed boost into our economy. But yes, my say is 100% grant, as long as the return on that 150 goes back into the municipal court, because it does essentially belong to the town. It's just another way of spending the money. It's a long-term investment, and it's a good return, as far as I'm concerned, for business. 8% is a very decent return, and the injection of the taxes in the water is going to be very helpful down the road. That all goes to the township itself. So.
Thank you for that, Councillor Kistmaker. I'm just by hearing everyone's comments, I'm pulling from everyone. So we want it reinvested in the Municipal Service Corp. We want to ensure it's a profit generating reinvestment. I think that goes along with what Councillor Stefanik was saying about strategic, ensuring it follows those strategic investments of the Municipal Service Corp, and that it's a complete grant. They can fly with it and continue on.
Yes.
Okay, so the condition would be that all revenues from the investment would be further, or would be used to further the MSC's strategic, do we want to go goals or objectives, or I can't remember what Councillor Stefanik had said. I'm not sure. It's strategic
Objectives.
objectives. Okay.
Mm-hmm. That encompasses everything that they're striving for.
Okay, so it would be it further resolved that the following conditions will apply to the arrangement. All revenues from the investment would be used to further the MSC's strategic objectives. So that would be 1 point. Is there any further points? Go ahead, John. Go ahead, Councillor Parra.
Should it say that the revenue generated should remain within the Hornepayne Housing Corp and not?
Yeah, we could put that as a solid, its own point, that we could put that first. All revenues will remain within the Municipal Service Corp and the grant and the initial grant amount. Do you want that first? And then this point?
Yes, please.
I'm doing a rough copy here. All revenues. Okay, just all revenues and initial grant of 150,000 will remain. Do you use the word property, Melissa, for funds, or will remain funds of the Municipal Service Corp or property of the Municipal Service Corp? Sorry to. Pardon?
Asset?
Asset. Okay, will remain an asset. Thank you. Okay, so I have all revenues and initial grant of 150,000 will remain an asset, assets of the MSC. Second bullet, all revenues from the investment would be used to further the MSC's strategic objectives. Good. I think that's all encompassing. Melissa, do you think we're missing anything?
No, I don't think so.
No, everything else will fall under their bylaws because they have to report to us annually and all of that. So,
And I'm sure there'll be an agreement with the MSC and Rideout development. So that's beyond our capacity, right?
right. Do we want to ensure that, do we want to put that in here that there'll be no further grant? We want it to cap at that as the investment? Or do we want the MSC to deal with that? Do you understand what I'm saying? Where we were talking about if there's further monies needed to get the hotel up and running, are we going to be open to them coming back to us? They got to negotiate with their 150,000 and that's it.
That's correct.
Okay, so do we want to put that as a point in our, no? We don't need,
I don't think so.
no? Okay. Okay, well, if I can get a mover and a seconder, please. Are we done? Sorry, I should wrap this up first to ensure that we've got the resolution the way we want it. Do you want me to read it one time for you? Before we get a mover and a seconder? Here we go. Be it resolved that the Council of Corporation of the Township of Hornepayne does hereby agree to grant $150,000 to the Hornepayne Housing Corporation for the purpose of purchasing a share in the hotel investment opportunity provided by Rideout Bay Developments Incorporated. Be it further resolved that Council does hereby authorize the Client Service Manager Treasurer to transfer $150,000 from the Municipal Service Corporation's Fund Reserve to the Hornepayne Housing Corporation for the purpose of participating in this opportunity. Be it further resolved that the following conditions will apply to the arrangement. All revenues and initial grant of $150,000 will remain assets of the MSC. All revenues from the investment would be used to further the MSC's strategic objectives. Sound good? We're good with that? Okay, if I can get a mover and a seconder. John and Peter. Bear with me, I need to write this in. Okay, the only other addition I put was just put HHC because that's our acronym for Hornepayne Housing. So I have MSC-HHC. Okay, so moved by John Peroff, second by Peter Kistemaker. Be it resolved that the Council of the Corporation of the Township of Hornepayne does hereby grant agree to grant $150,000 to the Hornepayne Housing Corporation for the purpose of purchasing a share in the hotel investment opportunity provided by Rideout Bay Developments Incorporated. Be it further resolved that council does hereby authorize the client service manager treasurer to transfer $150,000 to the Municipal Service Corporation, from the Municipal Service Corporation Fund Reserve to the Hornepayne Housing Corporation for the purpose of participating in this opportunity. Be it further resolved that the following conditions will apply to the arrangement. All revenues and initial grant of $150,000 will remain assets of the MSC-HHC. All revenues from the investment will be used to further the MSC-HHC's strategic objectives. Be it finally resolved that the client service manager treasurer is hereby authorized to complete the transaction on behalf of the municipality. Any further discussion on the motion? There being none, I put it to a vote. Those in favor? And that is carried. None opposed. Okay, so we're moving on into our agenda. To item 7.1, other business. Did you want to speak to this, Melissa, beforehand?
No, I don't think so.
No? Okay. So in your packages, you saw that the Northern Credit Union, I don't have it in front of me, suggested that the township, it would save quite a substantial amount of money, and the township is able to guarantee the amount of $80,000, and that's to secure all the lending that the MSC is taking over. If I'm saying this wrong, Melissa, please jump in and correct me. So basically the MSC is, Hornepayne Housing is taking on all the debts that were with Parkview Apartments. That was in our agreement. And to do that, they would need to give $80,000 to secure those debts. But as a municipality, we can secure them for them. So that's what that other $80,000 is for. And nothing changes hands, right? It's a security paper. Is there any further discussion on that? I can get a mover and a seconder, and we can open up a discussion if you'd like. Grego, would you like to move? Okay, and Peter? Moved by Drago Stefanik, second by Peter Kistemaker. Be it resolved, the council, the corporation, the township of Hornepayne does hereby authorize the client service manager treasurer to further investigate the potential of the township to provide Northern Credit Union with an $80,000 loan guarantee to Hornepayne Housing Corporation, and to proceed with the required documentation to complete the transaction, if viable, under the guidance of the municipal solicitor and municipal auditor. Okay, and my one question is, if viable, so if, when you say if viable, is that it's all legally permissible? Is that where we're, and so that we don't have to come back to council for that? Okay.
So I'll bring it back to council if he says that we can't do it, but if not, then we'll just go ahead and do it.
Okay, okay, sounds good. Thank you. Okay, is there any further discussion on the motion? Okay, I don't see any, so I'll put that to a vote. Those in favor? And that is carried, none opposed. Okay, so we're moving on to adjournment. I'll need a mover and a seconder for our confirmatory bylaw. Belinda and John. Moved by Belinda Kistemaker, second by John Peroff. Be it resolved that bylaw number 1867, being a bylaw to confirm the proceedings of council at their special meeting of council held on Monday, July 19th, 2021, be hereby read a first and second time and be considered read a third time and finally passed. Those in favor? And that is carried, none opposed. Okay, and our final is the adjournment. If I can get a mover and a seconder, please. Drago and Peter. I'm smiling, Drago, because I almost wanted to yawn and I was trying to hold it in so you didn't see me. If you're wondering why I'm chuckling over here. Okay.
You're gonna provide me the visuals, non-verbal. Okay.
I'm really
Thanks.
trying to hold it in. Moved by
Okay.
Drago Stefanik, second by Peter Kissmaker. Be it resolved that we do adjourn this special meeting of council held on Monday, July 19th, 2021 at 7:26 p.m. Those in favor? And that is carried. None opposed. Thank you, council.
Thank
And
you.
thank you for meeting
Thank
for
you.
the special meeting. Have a good night, everyone.
Good night.
This
Are you-
conference is no longer being recorded.
I'm gonna go down for a walk and I'll put the paperwork in my file and it'll be there for you in the morning. And I'll be around, Melissa, tomorrow if you want to, if you need any signatures, just send me a text and I'll come down, okay? Or sorry, not tomorrow, on Wednesday. I'll be away tomorrow, but I'll come down on the next day, okay?
Okay, sounds good.
Okay, bye-bye.
Bye.